please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me, Sonia in a bright green and Anuj in a more sober blue. Well, the markets
we were in green yesterday.
Yeah, we were absolutely in green
Trying
yesterday.
to keep it with the mood, right?
Actually, maybe we presaged it. But, well, today, although the global markets did show an upturn yesterday itself, even when we were trading, metals had started bottoming out and European and US markets were giving us a shade of green. Today, it could well be that the markets will catch a breather. A repeat of yesterday's rally may be tough for two reasons. One, that of course we are heading into a weekend. We are yet to get the Gujarat results. And of course, the non-farm payroll numbers will also be something which global markets may worry about a bit, though it is expected to be a monster 195,000 job number. Nevertheless, it's quite possible that a repeat is difficult, but clearly the bulls appear to have got their mojo back without any of the institutions supporting them. It wasn't a big, it was a big sell number from FIIs, and the DII number was actually, okay, buy, but not very big.
Yes, absolutely. So, you know, once again, 1,000 crores of selling by the FIIs, but who cares about that, right? The ticker showing you something else. Anuj, morning. We generally tend to get carried away with a one-day move. Is that what's happening now as well?
Morning, Sonia. We'll find out today, right? I mean, if we have follow through. But, you know, yesterday's gain wiped 3 days of Nifty's losses. The template for this market has been one step back, two steps forward. This time we have taken 2 steps back. So do we want to take 3 steps forward to sort of respect the template? I think the test for market will come today and maybe on Monday, because the last time when we had this kind of bounce from 10,050, 10,100, the Nifty showed you 20 DMA halt. 20 DMA halt essentially is, you know, when you're trying to rally, but you sort of stop there and then, you know, get back to the lows. That I think is a risk for market, but we are at 10,166, that 20 DMA is 10,250. So obviously it's not the base case that you go there today, but that will be of course tested. But for now, one thing which has got established is that what we had in our market was not essentially a breakdown. It was just a normal routine correction. And this is not a market which is really seeking much lower levels, unless, of course, global things completely go out of hand. The Bank Nifty could outperform today. That's my sense, because yesterday was weekly options expiry, and that really capped Bank Nifty's gains. 25,100 call was written like Gay Abandon, and that's why, you know, that level somehow was respected even despite the late flourish. So for me, today, the key would be to watch for the Bank Nifty. There, the 20 DMA is 25,500. But, you know, having said all of this, portfolios are still making a lot of money. The mid-cap index is within 1.7% of new high, and that has been the other template of this market. That's the index which normally hits new high first. Because, you know, when traders get a sense that the market does not have too much downside, they are comfortable holding mid-caps and buying mid-caps, and that propels the mid-cap index. So that should hit the new high first, then probably the Bank Nifty and Nifty. But let's wait for this follow-through, and, you know, it would be important to defend the last low and make actually a higher low on a closing basis.
Okay, it has been a really interesting and volatile week, you'd have to say. We started off the week on a downtake, and, you know, there was a disappointment of the S&P not coming up with that upgrade, etc. And then after that, look at where we are. By the end of the week, we're back above 10,100. But let's kickstart the day and tell you what our wise experts have to say as we head into trade this morning. Chris Wood of CLSA says the recent sell-off in the US market leader, namely tech stocks, raises the issue of whether the whole bull run has peaked. Given the way the FANG stocks, as he explains it, Facebook, Amazon, Netflix and Google, have driven the US stock market higher. Wood adds that greed and fear is of the opinion that it remains more sensible to hedge the risk of a further reactivation of the Trumponomic trade rather than to bet on it fully. The best way to do this is for global equity investors to own Japanese financial stocks. That's an interesting one.
Okay, well, let's get you some other views as well. Seyon Mukherjee of Nomura is bullish on Indian equities with a December 2018 target of 11,880. So basically almost 12,000. Mukherjee's reasons that business is on the cusp of an upcycle. This, he feels, will drive strong earnings growth as corporate earnings to GDP ratio is at its lows with significant contraction in margins and return on equity. This is also supported by stable macro fundamentals and cleanup in the system in terms of stressed assets and unprofitable players. Seyon adds that they are overweight financials, energy, infra, construction and healthcare, while their underweight sectors include IT, consumer staples, utilities and cement. Nomura's top stock picks are RIL, GAIL, HDFC Bank, SBI, Shriram Transport, Maruti Suzuki, M&M, Ashok Leyland and L&T. That would be a no surprises list.
Okay, yes, and betting a lot on the recovery in the capex
in the
cycle.
industrial upcycle.
Yes,
yeah.
So that's interesting because that's like the third or fourth person who's telling us that they're betting on the capex cycle recovery. Let's get you some money market views as well this morning. Bhaskar Panda of HDFC Bank says the dollar INR pair is consolidating around the 64.50 pivot. He expects the pair to trade within a range of 64.45 to 64.60.
On the 10-year bond, Bhaskar Panda says 10-year benchmark bond yields reaction to the latest RBI monetary policy was short-lived. Expects it to trade in a range of 7.04 to 7.07 for the day. Actually, the most unfortunate and unhappy people in the world today are bond market traders. Every other market seems to jump up and down and they feel they have no work. They're missing out on all the fun.
And actually, I would say that the unhappiest lot actually is the one
Who
which
didn't
is not
buy
Bitcoin. I think 99.99% of the
Blasted
world.
through 17,000, right?
19.
Yeah.
What kind of
19 it went.
I mean, phenomenal the way,
went to
just phenomenal the way it's gone up. From 3,000 we've been hearing bubble, but now where it is. But anyway, let's talk about equity markets globally. Here's Ronit with the world view.
Thanks, Anuj. So all three US indices closed in the green. It's a sea of green over there. So the Nasdaq notched a 3-day winning streak after losing streak last week. So you know the likes of Facebook, Amazon as well as Microsoft, they all ended in the green, up almost 1 to 2%. Moving on, reports suggest that Trump may unveil a $1 trillion infrastructure plan. So likes of the building material stocks such as Vulcan Materials, Eagle Materials, all are up around 2 to 3%. Moving on to European markets, over there also most of them closed in the green, with the FTSE a slight underperformance there. Basic resources stocks, they are one of the top losers, largely because global commodities, a slight correction coming in there. So the likes of BHP Billiton as well as Glencore all closed in the red. Moving on to an individual stock, Steinhoff. After tumbling almost 63% yesterday, it fell another 43% as the accounting irregularities still suffer this company. Moving on to Asian markets, the Asian markets have opened in the green, where all of them are sea of green, as you can see. And finally, the SGX Nifty also indicates a green start. Back to you.
Okay, thank you very much for that summary, Ronit. Well, you know, you spoke about the industrial upcycle and people are betting on Trump's upcycle because of an infrastructure investment. Actually, the big story of the morning is something you all passed over to us from Closing Bell. Come March 2019, probably every citizen of India will have a right to get uninterrupted power supply. The centre is planning to amend the existing electricity law to guarantee 24/7 power supply for all. And that's not all. Power Minister R.K. Singh also said yesterday that there will be penal provisions for unwarranted load shedding by power discoms. Listen in, yesterday in late evening, late afternoon, the stocks did react. Power stocks reacted positively to this. But I think that's not the end of the reaction, and that's why we are placing this important soundbite on the table for you.
Our vision is that we want 24/7 power for all. We have a time frame for that. We have agreed that a time frame for that is by March 19th. This has been under discussion for some time. With all the states, the roadmap has been worked out. And now we'll make this a legal obligation. We'll put it into the law that after March 19th, if there is any load shedding, without any reason, if there is any gratuitous load shedding, there will be penalties.
Wake up this morning to positive cues from across the globe. In fact, Japan is up and about this morning, and that's because Japan's Q3 GDP has been revised upwards to about 2.5% annualized growth. That's why you see a good move coming in there. It'll just be up for you in a minute. Hang Seng too is in the green, up about 130 odd points. But let's tell you about our own markets and the kind of stocks that you need to watch out for this Friday morning. Hi guys, morning to all of you, bright and early. Anuj, what are you looking at?
So two stocks, Sonia, one large cap, one mid cap. The large cap stock is Avenue Supermart, DMart as we call it. Big bounce yesterday from 20 and 50-day moving average. There was a bulk deal, so that's why the delivery volume looks large. But we don't have data on who bought it. Technically, a strong stock which bounces from 20 and 50-day moving average normally has followed through. The other is a mid cap stock in a really good sector, which has really been the toast of the market for last many months now. Make Money Organics, huge bounce from its 20 and 50-day moving average. And just look at the delivery volumes of last 4 to 5 days, consistently 45 to 50%. So there's been heavy accumulation on this stock. So that would be the other stock to watch.
Okay, thanks a lot for that, Anuj. Sonal is in orange. She could have been in a bright red attire, considering that Jet, after its numbers, is going to be taking a knock today. Sonal?
Definitely, Latha, the numbers are very disappointing. The higher costs have continued to dent their margins. Now, if I take you through the details, the revenue was up around 4%, EBITDA came in down by around 30%, and the margins took a hit of around 700 basis points. That is not all. The profits were down 91% year on year. That was majorly because the other income fell down by 58%. Talking about the cost, the fuel costs were up 16%, and the other expenses were up around 26%. Now, talking about the segments, they did well on the domestic front. The revenues were up around 15%, but the demand crisis in the Gulf area continues, and that's why the international revenues were down around 4%, and I expect the stock to be in red today, sorry.
Okay. Yes, it is red indeed. Thanks for that, Sonal. From Sonal to Sonia. Tata Motors likely to do well today?
Yes, we reported yesterday that the Jaguar Land Rover numbers for November were quite solid this time around, and most brokerages have given it a thumbs up. So Credit Suisse has said that after 5 months of a disappointment, finally JLR numbers have come back into double digits. So that's a positive that we've seen this time. The new Velar, the Range Rover Velar, is something that has really aided their volumes this time in the Land Rover segment. That the Land Rover volumes are up 17%, so that looked pretty good. Even Kotak is positive on the stock. They say that over the next few months, because of the new launches, they expect the volume growth to pick up. However, we must mention yet again that Tata Motors has been the big underperformer in the auto space. So let's see, because of these numbers, whether there is any kind of improvement in the stock performance.
Fair point. Thanks a lot for that. Now to Emami. Mangalam, why are you watching Emami?
Well, they've entered into the male grooming segment. An interesting development there, not from just today's perspective, but the industry itself. They've bought about 30% stake in Helios Lifestyle Private Limited. They sell male grooming products online under the brand name The Man Company. It's a small acquisition in terms of the revenue potential, but the scalability is what is important, because as an aside, the male grooming segment is what, a 3,000 crore market growing at 15-17%, and Marico bought Beardo, a male grooming company, in March itself. So it's an interesting development there. We'll watch out for what the scalability of this is. Right now they did 5 crore revenue, but remember the previous year they did 1 crore revenue, and that is just online.
Who were the male, the brand ambassadors for this? There was Shah Rukh Khan, who was giving one male.
That was Fair and Handsome, but those are again male fairness creams. They have Hrithik Roshan and he and stuff as well, but this is male grooming, which is your beard wax and perfumes and all of that maybe.
Okay, interesting. But anyway, let's move on. Anisha, NCL Industries.
Well, yes, we've seen a lot of news coming regarding the fundraising, and NCL Industries is also cashing in. Back in August, the company had approved raising around 250 crores through a private placement, and now the QIP is open and it will close on December 12th. As far as the floor price is concerned, that has been decided at 249.63 per piece versus the current market price of around 244. So we might see just a bit of technical adjustment there. But also remember, the stock has nearly doubled from the year beginning, but maybe just a bit of more green tech depending on the demand of this QIP is what we'll see.
Okay, Anisha, thanks a lot for that. Yesterday, Escorts has corrected a lot and had a sharp bounce. And this morning, Sonia, there's some good news.
Yes, HSBC has initiated coverage on the stock with a buy, and they have a big upside to the current market price. 835 is the target price that they are looking at. They also forecast the EBIT to rise at a compounded annual growth of 33% over the next 3 years. That's up until FY20. And they also say that 2 things, cost cutting and an improved product mix, is going to aid growth. Now, I just want to make one point about how farm mechanization has become very big with all of these tractor companies. So not just a good monsoon, but now they're getting into newer ways of, technology in the farming space. And Escorts is coming out with a range of new products in terms of farm mechanization. So that's something that will aid their earnings as well.
More strength to removing weeds so that they don't have to burn it. If you thought this is a great upgrade in terms of price, you haven't heard what Morgan Stanley has done to Future Consumer, Mangalam.
That's right. The first time any brokerage has initiated coverage in Future Consumer, and this is after the stock has moved nearly 3 times from the start of this year. So they have a target of 95 rupees, which believes that a 63% upside even after a 3 times move from the start of this year. And Morgan Stanley, they've got it right on future retail as well. The stock has tripled from their coverage after tripling before their coverage itself. They expect Future Consumer to be the fifth largest FMCG company in India by FY21. Scale-driven efficiencies, better product mix, all of that would aid EBITDA margins by nearly 470 basis points. Valuations, they're out of company at 61 times FY20 earnings. So I mean, one can take a call as far as the valuations are concerned, but given the appetite the street has for consumption stocks, this may just hold on. The key risk is dependence on future retail store for expansion, because that's where they sell most of their products.
Okay, Mangalam, thanks a lot for that. Huge surge in GAIL yesterday. Naveen, any more follow-through expected?
So, Anuj, as we know, yesterday the stock was up more than 8%, but today some good news came in post-market hours yesterday. So, the company has awarded natural gas pipeline for 520 kilometers from Dobi, that is Bihar, to Durgapur, which is in West Bengal. Remember, this is significant for the company because it increases its presence in the eastern India that part of the market, which is not generally that penetrated. Also, the capex, the chairman announced that for FY19 is expected to be anywhere around 6,000 crore, which is up 50%. So, another good news. Apart from this decent delivery, also we saw the delivered quantity marked for delivery was close to 31%. Expect a light green on the stock, because the only reason being that the stock was already up 8% yesterday. Back to you.
Okay, thanks a lot for that, Naveen. Let's go back to Ronit and find out why he's watching Bharti this morning. Ronit, over to you.
Yeah, so Sonia, Bharti Airtel held an analyst meet in Uganda with the management, and Goldman Sachs have come out with a note on it, and they say that the African business should no longer be a drag on the entire business. Remember, it was a big pain point for Bharti Airtel, but now the African business contributes around 20% of the revenues, and the management believes that margins can improve in the African business if revenue market share increases. So Goldman Sachs says that they expect a EBITDA margin around 34% in the African business. Remember, in Q2 they reported an EBITDA margin of around 32%. So moving on, they have a buy target on Bharti Airtel with a 550 target. Back to you.
All right, let's do a quick recap then. Thanks, guys, for giving us all of those stocks. And here are our list of top 10 stocks expected to gain today. Names like Avenue Supermart, Make Money Organics, Tata Motors, Escorts, Imami, NCL Industries, Future Consumer, GAIL and Bharti Airtel. While the lone stock from our list expected to be under pressure